Good afternoon, everybody. This is Stan and Jack, and we're here to do a webinar today on compression and expansion and looking at compression and expansion as a trading system. And there are a couple of examples we're going to talk through, which include triangles as a simple form of understanding compression and expansion. We'll talk about that. And we're also going to look at Bollinger Bands and even Keltner channels in Bollinger Bands. So we're going to give you just a couple of things to look at. Hopefully some of this can add value to what you do. And our disclaimer, of course, we do this for educational purposes only. We're not here to try to issue trading signals at all. This is an educational webinar, and that's kind of why we do what we do. So with that said, Jack, anything you want to add up front before I kind of launch into triangles?
Nope, let's go.
Okay. Triangles. Let's just talk about triangles. Triangles are a form of compression and expansion. And there are many different forms of triangles. There's the expanding, and Jack would call this a megaphone, okay? And of course you get, this is expansion. This is a form of compression that actually causes price to expand, but if you look at RSI, when you see one of these, RSI is actually contracting, okay? So this is your typical triangle, a contracting or symmetrical triangle. You have them this way and also the inverse, but the idea here is to recognize compression in the market, okay? Now let me take you with, I'm going to take you on two very simple examples, and by the way, this happens on multiple time frames, okay? So let's look at a daily chart of the S&P. Okay, so here's a daily chart. The most classic, oops, oh geez, I just moved something. Oh, I'll have to fix that later. Here's a classic example of compression. Do you guys remember what happened in 2015, this 6-month period? Okay, this is the classic bigger picture version of compression, okay? Look at RSI. Look at how it compressed, okay? We were just all over this top, Jack and I. We were saying this is a compression. We're going to get a big expansion. Here it comes. And then even in the expansion, look what happened here. Another triangle. Look at the compression in RSI, which led to an expansion. When we were up here, we were calling 1820s. Okay, so and by the way, that's roughly the area that we hit. What I want to say about compression and expansion is, first of all, there are simple ways to recognize it. The most simple way is triangle compression, okay? You got a compression like this in RSI, that means that there's compression building in RSI. This is a rising triangle, basically. It's also called an ending diagonal, but you see the compression in RSI, you see the rising wedge, and you know you're going to get a move from, you know, once you begin the expansion here. So, and by the way, when you see compression in the market, typically what you see is Bollinger Bandwidth compresses. Now, I use Bollinger Bandwidth a lot to recognize compression, and when you get Bollinger Bandwidth down around a 2, for example, like right here, you typically get an expansion to at least a 5. So here we are at 2 roughly. Here is pretty close to 2. You get an expansion to at least 5, okay? So, you know, the reason I use this is it helps me recognize, and I'll show you some other examples, and let's look at the current market as an example. Bollinger Bandwidth, you want to talk about something really extreme? Look at the period we're exiting right now, okay? Look at the number of days of Bollinger Bandwidth compression below 2, okay? This is a way of recognizing when compression is in place in the marketplace. By the way, is there a triangle here? No. Does compression only happen with a triangle? No. But you see compression in price, and by the way, some of this is the summer trade, okay? You know, you don't get a lot of volatility in the summer usually, not always, but you know, when you're below 2 on the Bollinger Bandwidth, you got a market that's fixing to make a move, okay? And you've seen it, okay? You typically out of a compressed market, you get mean reversion, okay? And there are plenty of mean reversion systems out there. I'm not going to get into that, but the ultimate form of mean reversion is, of course, the 200-day moving average. Now, what I'm going to do is just look at something very short term, just to make a point, and this is just a quick recap on triangles. I'm actually looking at the E-mini right now, and last night what we said on the E-mini was expect a turn at 2109, or if we break it, expect a turn down at 93s. And we have price cycles actually showing that this was a turn, which the price cycles that we had, where is that chart? Okay, these are the price cycles I put out last night. So, you know, pretty extreme situation here. This is what we look for in trading on the Art of Chart, are extreme situations. And bottom line here is this movement happened from a triangle. And I want to take you in on this because this was a key moment yesterday. Do you see the compression here? Right here in RSI, this ascending little triangle here. It's so small, but I guess the point I'm trying to make, I'll take you in on a 3-minute chart even to show it to you, because it's so important if you're day trading. What I'm saying on a larger scale basis, I'm just trying to make the point that it works on a small scale basis. I was looking at a 1-minute chart, right there it is, and we have a little triangle right here. Okay, an A, B, C, D, E, and from up here we said watch for 17s. We hit 17s. We said if we break 17s, guess what? We're going to go lower, and 17s was a key area. You can see it was resistance here, and lower we went to 09s, okay? So even on a day trading basis, noticing compression in the market, look at the triangle here. This is, again, very short term. What I'm trying to say, guys, is that the principles are the same, and I don't care if you're watching a 1-minute chart, okay? That's where I saw this actually, was on a 1-minute chart, okay? There's your triangle. There's the compression in RSI. By the way, do you remember yesterday? Those of you who trade the mini, it was kind of boring for a while. It was like tight, you know, we weren't going anywhere, and then the expansion happened. Okay, so it pays to look for triangles, compression in RSI. And what I'm trying to say here in so many words is compression is something that you watch for because there's a reward if you can spot it. Okay, you get into a decent trade and you make some money. So I think that's the main thing that I want to say about compression and expansion is have tools to see it. So one tool is just looking at RSI, looking at compression, finding it in the marketplace, whether it's on a daily chart or a 1-minute chart. Okay, and then the second thing is look at Bollinger bandwidth. Okay, Bollinger bandwidth is key to noticing when you get really compressed, especially on a daily basis. And then, of course, the expansion. And by the way, that Bollinger bandwidth tool that I showed you, which is on every trading system that I know of, you know, if I'm in a trade and I'm at a Bollinger bandwidth of 2, I'm holding my trade until I get to a 5. Okay, because that helps me hold on to a trade, which sometimes is difficult in terms of, you know, in terms of learning how to trade. Sometimes the most difficult thing to learn how to do, in my opinion, is learning how to hold on to a winner without getting out too soon. Okay, and so having tools that help you do that, I think, are important. So that's my opener, Jack, on triangles and just noticing compression in the marketplace, how it shows up, and what to look for. So I know you have a bond example, I think.
I do.
Okay, let me throw it over to you to get your take on compression, looking at triangles.
All right, now this is a favorite of mine, and this is an absolute beauty that's playing out at the moment. This is TNX, which is the TNX is the 10-year Treasury yields, and this is a triangle that formed on that, although it appears a bit differently on TLT and ZB. Now, this is, you've got A, B, C, D. You quite often don't get a touch of the opposite of the other line for the E. Often truncates and then breaks up. You then get a back test. And actually, I drew this and I posted it on the 28th of August. Wrote this note above it. And actually, I haven't moved an arrow since. Look at how beautifully this has performed. I don't know whether it's going to play out the rest of it. Just deciding that now. But what we did was we broke up, and that's when I did the chart. Then I did. We had a complex return back here, and then we went up to the obvious target that I was talking about, which is 17.5, slightly overshot it at 17.52, and now it's thinking about it. Now cycles are suggesting this is going to go higher. I would love for it to reverse here and retrace the triangle thrust, because that would set up a really, really nice IHS, which would then set up the next big move down in bonds. So this is a lovely example, but see how predictable this was. We broke up, and from there I drew these arrows, and look how closely we followed them. This is a beautiful triangle, and at the end of this triangle thrust, it should retrace from wherever the end might be. We reached the first candidate here, and it's thinking about it. So here we are, compression, things are getting really boring, but it breaks, and you know things are about to get very interesting, and they have been. bonds has been a top trade for the last couple of weeks, and will continue to be for quite a while, I suspect.
Yep, very good. And I want to say this, sometimes you see the zigzag there in terms of a triangle in price, but you don't get what you see below there. Even MACD, look at MACD, how it compressed. And could you show them RSI, Jack?
Yeah, this is the triangle on the RSI 14.
Yep. And I just want to say...
I've got another one on TLT. Hang on, I'll just show them that quick. That one.
Yeah, sure, go ahead. So yeah, I think the main message for me is there's a lot of formations in price that look like triangles. But if you look at RSI and it's not compressing, guess what? You don't have a triangle, because triangles typically expand, okay? So the expansion comes from the compression. If you don't have compression in RSI, you don't have a triangle.
And this is the TLT daily chart while I was falling. Isn't that beautiful? You often will find the best triangles are actually on the RSI. Considerably better than price. You'll often find rather messy price and a perfect triangle on the RSI. So that's something I look out for. This was a beauty.
Yep.
So, yep. All right, great. Throw the screen back.
Sure. I'm trying to get my Keltner channel set up here. If you're ready, Jack, just throw it back.
So you can take a moment. Now, what we're really thinking of here is, and we could go lower. If you notice, we've gone and hit this this particular low. We've hit the equivalent high on TNX here, but notice the variance between TLT and TNX, and you get an actually even larger variance, I think, on between TNX and ZB. We are this could well go lower down to here, but you see we've got wedge breakdown. When we retrace the triangle thrust, that's going to be the retest in all probability of this broken support trend line. If it goes lower, I'm going to be watching this trend line here, and I've got a level also on ZB at 163.18, which I'll be watching. But I think you can see the case for it going lower looking at this TLT chart. On TNX, it should reverse here, but it's a little different, and we actually chart all three of them. So we're looking at all three of them at any one time.
Yep.
All right. Great. You ready?
Yeah, sure. Ready.
Okay.
I tried to create a very simple chart to make the point here about a trading system that I use. And I have by the way, the screen you're seeing is not the screen I trade off of, okay? This is where and by the way, I recommend this to anybody who trades. It's good to have a separate system where you do your technical work. Now, I do technical work on my real-time trading charts as the market is expanding or contracting or moving around, okay? So I'm doing real-time stuff, but, I have a separate system that allows me to look at the market other than me looking at my trading system, and I think that's important because you want to break whatever thoughts you had during the day. Okay, you want to break whatever thoughts you had during the day on your trading system and go to a completely different charting system in order to break your assumptions so you can see what's there. Okay, so this is an example, and so what you're seeing is not what I trade off of, but you're seeing my technical analysis setup. Okay, now this is something that I use in the evenings, and I'll make this a little larger. Maybe it'll be easier to understand. And something I have mentioned time and again over and over to subscribers is Keltner channels and Bollinger Bands. Okay, now it's important to understand the concept that when Bollinger Bands, first of all, if you look at the purple or pink lines here, depending upon what color they are on your screen, the majority of the time Bollinger Bands in blue, the upper and lower bands, okay, they're outside of Keltner's. They're outside of Keltner's, okay? Now, what happens is when they get inside of Keltner's, okay, this is what I call compression, okay? I want you to look at this period of compression here, okay? That's 25 days of compression. That's extremely high, okay? You don't see this very often, okay?
Actually, I have heard that that's actually the longest period of compression in SPX history.
It might be. There was a period here, and I marked it with a yellow box. This period here was pretty close to the same length. It was maybe a little bit shorter, and then we had this expansion, but then that expansion turned into a triangle, which then led to this expansion. But, at the top of a market, you typically see something like this. You see, an extreme example of compression. By the way, 14 days of compression is a great period of compression on the S&Ps. This was like 25 days. It's like an amazingly long period. So you see something like this. Number one, you know, it could break up, but your chances of having a market like this and then having a period of compression like this, the options of going to the downside are very, very high. So, you know, you can put some decent size on up here and not worry about, you know, this happening. Like if Bollinger Bands are outside of Keltner's and I'm putting on large size here, I might be in a 50-50 proposition. Your chances and your odds go way up when you're at the top of a formation and you get this sort of compression, that the direction is going to be in the down direction. By the way, it could go up as well. I don't want to discount that. But so number one, Bollinger Bands inside of Keltner's tell you that there's a move coming, okay, that there's a move coming. And so we've gotten that move. Now, what you wait for is you wait for proof, and the proof is Bollinger Bands crossing outside of Keltner's, okay? And look at how tight this got. Now, by the way, if you notice here, we're barely inside, here we're barely inside, and then we're really inside, okay? So this 4 or 5 day period here, we were really deeply inside of the Keltner channels, which, by the way, you don't see this very often. Look, you see it here touching, okay? And even here at tops, and by the way, at bottoms, there's this strange thing that happens near bottoms where there's all this volatility, and Bollinger Bands cross inside of Keltner's near bottoms. I haven't completely figured this one out yet, but this happens here. It happened again, right near a bottom. Okay, Bollinger Bands cross inside of Keltner's. So this is a signal. Okay, but you know, a more reliable signal, in my opinion, is the compression. Compression leads to expansion. Now, here's the formula I use, okay? Count the number of days of compression where Bollinger Bands are inside of Keltner's, okay? And then usually 75% of that duration, you're going to get the expansion, 75%. So if you have 25 days or 20 days, to make the math easy, that would be 14 days of expansion, okay? So, and that usually turns into a band ride, which is kind of what's happening here. And you know, we're looking for another high window based on timing cycles. So this compression, by the way, can continue to expand. And we could even, you know, this may compress slightly, but this could continue to expand. The bands could continue, the Bollinger Bands could continue to expand. So this is a trading system. I use it in conjunction with Bollinger Band width. So, you know, when I'm below 2, I'm looking for a decent expansion, and it could be in the upwards or downwards direction, but typically when you're below a 2, you're at a high, okay? Because, you know, a bottom, usually you're at a fairly decently high level of volatility, and you're nowhere near a 2. Like this turn here, okay, we weren't anywhere near a 2, okay? But usually an expansion, you might go to a 5, you might go to a 6, and by the way, that's an area where you want to reduce your size. Okay, and you know, you get moments where you get this kind of expansion, okay, or I should go back in history and talk about Bollinger Bandwidth a little bit. Here we are at a 2, and we got a huge expansion. These don't happen every day, okay, and if you're not looking at larger timing cycles, you're not going to be able to pick these out, okay. But what I'm trying to say is, you know, when I see a 2 and I'm looking at Keltner channels, this is calling for expansion. And the number of days, I'm looking for that number of days of expansion. And by the way, it doesn't mean it's going to go in a straight line. So that's just something that I use personally. And so, you know, you start noticing, and by the way, I use this on a 1-minute chart. Okay, so I see 1-minute charts and I see compression. Guess what? And by the way, going back to my 1-minute mini example, do you think I'm that lively every day that I notice every single triangle that forms on a 1-minute or a 5-minute basis? I don't, okay? RSI is a clear giveaway, and also the cross of Bollinger Bands inside of Keltner channels. It's on my trading system, and I watch it, and when I see that, we get an expansion. So I see, you know, 8 periods of compression. Guess what? We get 4 periods of expansion. Okay, so if you're looking to do short day trades and get 2 and 4 handles at a time, you could just use Keltner channels and Bollinger Bands, and it works. Okay, it takes some getting used to. You might see 10 periods of compression. Even another tool that I use, and when I'm looking for a trend day, and this is another thing that I try to do, is I try to, in the morning, say, guys, we have a trend period here. We're looking for potential trend day today. I said that this morning, okay? And it was a trend day today, and that's based on cycles. But the thing is, if you look at an hourly chart, okay, look at an hourly chart, Look at Bollinger Bands and Keltner channels. If you have 1 day of compression, a day and a half of compression, 2 days of compression on an hourly basis, okay, you're fixing to do a trend day. So that's another way to use this tool that helps you predict, you know, an expansion. Because guess what? We as traders, at least me as a trader, I'll speak for myself. When I'm in this kind of market, I'm not at my best. Okay, this kind of market is hard to trade. It's tight. It's boring. There's not a lot of volatility. But you know, if on an hourly basis I see 2 days of compression, it's like I'm looking for the trend day. Okay, and I'm like really excited to trade. I'm like, okay, here it is. Which way are we going? Let's pay attention. And then, you know, finally you figure it out and you get on the right side of the trade and you make money. But I think tools are important for you to see what's happening. Just looking at price alone without tools, it doesn't help you really appreciate the market in terms of where it is. So that's my whole big thing about Keltner channels and Bollinger Bands, and I'm a big fan, by the way, as you can probably tell, because I'm pretty passionate about it. So,
as with most of the stuff we use here, anyone can do this. You can set up Bollinger Bands and Keltner channels and watch them yourself, and it's very easy, straightforward, and just use them. With experience, you will start to be able to read them much more easily.
Yeah, and I think the 1 minute works, the 3 minute works. For me, daily is more, you know, if I'm looking for a bigger move, daily is important. If I'm looking for a trend day, hourly is important. So, you know, what we try to teach here is we try to teach you basic stuff that works across time frames, okay?
I think it's fair to say my 1 minute charts look very much like my weekly charts. And daily charts and the rest of it. You're just talking about different scales. All the mathematical structures, patterns, trend lines, etc. They all work exactly the same.
Yep, absolutely.
The only thing you've got to account for at the really large time frames is inflation.
Oh yeah, absolutely. Okay, so at this point, guys, what I'm not going to do and what Jack's not going to do is lecture forever. We're going to give you a couple of basic concepts, okay, which we've done. Jack, do you want to cover anything else?
No, I think that covers everything on triangles.
Okay.
I mean, we could talk in detail about triangles, but we've already got other webinars where we've done that.
Yep. So I'm going to open the floor to questions, and anything. By the way, anything you want to ask, even detailed questions about today's price action, happy to answer them. But again, this is about compression in the market, recognizing it. Could be a triangle. Could be Bollinger Band tightness, could be Keltner channels and Bollinger Bands together, but trying to show you some basic ways of seeing compression so you can benefit on expansion.
Actually, I have got one triangle I'd quite like to show. Can you throw me the screen back?
Sure. That'll give folks a chance to put questions in. You have the screen, Jack.
Okay. Now this is a relevant one because I posted this one this morning. I posted this on RUT. Hang on, I'll just reduce the scale a bit. Let's reduce that to 10 days. Right. I posted this morning. This is a really nice falling wedge on RUT, you know, lovely, perfect trend lines. It broke up this morning, and I just posted it broken up, and that was obviously a worryingly bullish sign, and of course went up for the rest of the day. This was, we've reached the 38.2% fib retracement. When you see, I mean, this is actually a sort of, this is a cross between a, you get megaphones and you get wedges. A wedge is a sort of a triangle which is directional, a symmetrical triangle that is directional. So you see, this is a sort of cross between a triangle and a channel. You compress down to here, then you release. If it's a continuation wedge, then you will generally go up to one of three targets, which are the 61.8, 50, or the 38.2. Actually, it's fibs are upside down on this one, but we've reached the 38.2% fib retracement. This is a possible fail area, and I actually posted, don't know if you saw it on Twitter this afternoon, a beautiful rising wedge that SPX has formed from the low. So that is going to break down. Well, that's already broken down and is likely to retrace a bit. But here, of course, I was looking at this morning, but I was half expecting it, and that's because Stan, do you want to show that channel you posted, that chart you posted yesterday, with the cycles?
The cycles, sure.
Yep. I mean, I've seen the RUT wedge anyway, but I was.
You want to talk through that chart?
No.
Oh, okay. I'm sorry.
I'll throw you the chart back. But I was particularly interested in seeing this morning because I'd seen Stan's chart, and I'll show you that one.
Okay.
Well, Stan will show you that one.
You're talking about the cycle chart.
Yeah.
Yeah, okay. And just so people know, timing cycles are important, okay? And there are various ways to do it. Fibonacci sequences work. Cycle brackets work. I like Hurst because what it does is it does all the math and all the work for you. And when you're looking across 30 charts a night, let me tell you, this helps. And so, you know, this was the setup yesterday. And so I put this out on the daily update, and it's like, guys, there's upside here, and we've been talking about this high window at the end of September for quite some time. And so, you know, we had the 8th as a low window, and the 8th basically, well, basically when this bar got printed, and unfortunately this is what Hurst does, this particular tool, it shifts the window to coincide with price. So it's not a precise tool to say on this day you will turn, okay? And by the way, this could have continued lower, and it could very well go lower tomorrow. But this gives you a sense of confidence that, and we said trend day today, okay? When we said trend cycles in the broadcast last night, and you know, this played out, or this is playing out. Now we have a high window here. High window is, and I'm having a hard time now because this is actually an image, but we were looking at the high window ending at the beginning of October, starting around the 22nd, 23rd of September. So we have plenty of time to get there. Whether this high window is a new high or a lower high, it doesn't matter. Cycles don't care about higher highs or lower highs. They just care about where highs are, where lows are. Okay, so here's a cycle bracket for a low. Here's another one for a low. Here's another one for a low. It doesn't care which one's higher, which one's lower. Okay, it doesn't. So you have to do that with your other technical analysis. So that's my basic primer on basic cycle charts. And you can use fib sequences too. They work. Okay, I think this is far better from my perspective because I can see far longer term stuff, looking at longer cycles, and I like the 40 and 80 day and even 20 day cycles for short term trading purposes. So. That set up. We have some questions, Jack, if you're ready.
All right, shoot.
Okay, where was compression? Could you show the hourly chart from yesterday? Okay, were you talking about this chart of the mini right here? And this was on the 14th? Because I don't have compression on my hourly chart. Okay, what I was referring to was this period of time right here, which was from 10 o'clock yesterday, and I'm showing this to you because from 10 o'clock yesterday till about 11:30, or maybe a little earlier even, if I include this period of time, from like 9:50 until about 11:39, it was a sideways trade. Okay, so that's the triangle that I'm talking about that told me that we have the potential to go lower. And I called 17s and said we could find support here and bounce out of here, or if we break it, we go lower, okay? And we went lower to 9s, okay? So that's the compression I was talking about. So there is no, on my hourly chart on, let's just go to the S&P, I don't have any compression on here except for, I guess, Jack, you could, I'm stretching, okay? I'm stretching to say here's a little.
There was a type of compression we saw yesterday.
On the hourly?
No, I'm just saying that Russell 2000 falling wedge is a form of compression.
Absolutely agree. Absolutely. Okay, question for you, Jack. Do you have thoughts on whether commodities or metals compress differently or expand differently?
They compress and expand in a very similar way, I think. There are definitely variations between instruments in how they perform under certain circumstances, but expansion and compression perform much the same on commodities as far as I'm aware.
Yep. Next question. If market goes up now and bands compress, how do you use second and third standard deviation to judge new compression? Not sure this is a good question. Okay, let me answer that one this way. Let me just go to a higher time frame chart. Let me go to even a higher time frame chart. Okay. Now, does everybody remember this area right here? Okay, we were calling the 200% area on the S&P and on the S&P 500, which we hit perfectly, and of course in the overnight they threw it. They threw us through 2111s, and Jack and I were both screaming. It's like we're going to get a bounce. Okay, we're going to get a big bounce, and we got a big bounce. And why was that? And David, third standard deviation Bollinger Bands, if you're at them or below them, I mean, you are so compressed. It's a different form of compression. You're at such an extreme that you're going to go to the other extreme. Okay, so it's a little different than the compression we were just talking about, where the market gets tight, the range gets tight, and then you expand. This is where you're expanded so much, so quick. And I think if I remember right, do you remember the percentage numbers on third standard deviation, Jack? I think it's 98.6% of price over, a multi-year time period. 98.6% of price falls inside of third standard deviation Bollinger Bands, and I think 99.8 or something like that falls within the fourth standard deviation Bollinger Band. So, here we were outside of the third standard deviation Bollinger Band, outside of it, big time. Okay, we were almost at the fourth standard deviation Bollinger Band, and when you see that, guys, it's like an invitation to get long. So, David, this is not really compression. This is expansion to such a third standard deviation Bollinger Band. When you say that, I'm thinking we are expanded so much that it's going to go the other way. Now, it doesn't mean it won't. Yeah, I'm sorry, Jack, go ahead.
I would say one thing. There is a compression marked on that chart. When you're looking at the RSI divergence, to a certain extent, the RSI divergence is an expression of compression.
Yeah, that's a way of looking at it too. Sure, right here.
The compression into the move, after which you will often get a turn.
Yep. Okay, so David, does that answer your question? How do you use second and third standard to judge new compression? So, if there is new compression, I would expect, I don't think we're going to get new compression. I think we're going to continue to get expansion. But new compression would be Bollinger Bands going back inside of Keltner channels. That's what I would watch for new compression. And by the way, let me go back to the mini. The S&P. I just want to notice something here, and this is something that I notice because I track compression a lot. When I see compression, I get expansion. It's immediate. Okay, it doesn't delay. Okay, this period, I want you to look at this. This period was a long period of compression. We had like 20 days of compression here. Okay, look at the expansion. It took time to develop, and then we got the expansion. This kind of delay doesn't happen very often. I can't remember ever seeing this before. Okay, so markets change, and something that is in the back of my mind here is we have a high window here. Could we recompress? Because that's what we did here, by the way. We expanded and we recompressed into a triangle. Okay, could that happen again? Well, sure, we could, and this could be a double top, and so on and so forth. So in the back of my mind, I'm thinking, to your question, David. Yeah, we could recompress. We could, Bollinger Bands could go back inside of Keltner. So we got to watch for that. Okay, question for you, Jack. Do you have thoughts on whether? I'm sorry, we already answered that question. I think we're at the end of questions at this point. You're welcome, David. A pleasure, and thank you, Pat, for your kind wishes. And Jack, I think we might be out of questions. Let me just see if anybody else has any questions. We might have a wrap here. Anything else, Jack, you want to cover?
Nope, I think that's it.
Okay. Guys, I'm sorry, Jack.
I would say, actually, compression is one of the most useful tools you have. It's expressed in various different ways. I mean, you've got the RSI divergences are a form of compression. I think the Bollinger Band tool with Keltner channels is just an awesome tool for showing it. You will often see, if you look at the RSI and draw lines on it, as you should, then you will often see compression on it. And equally, you'll often see patterns on it. I see head and shoulders form on it. And they actually tend to play out extremely well. You get support trend lines. I mean, these are all really easy, readily available tools which you can use to help you a lot in terms of your anticipation of what's likely to happen next.
Yep, absolutely. Yep. And by the way, whatever helps you, and this is really important, guys. We sit here and we talk about what we're passionate about. You got to find what works for you. This is the stuff I've discovered over the years that works for me. It helps me see. You got to trade what you see. Okay, so whatever works for you guys, you got to discover it on your own, and we're trying to help you with that. Okay. There's a question from Joe while we were talking, Jack. Last Thursday, 1 minute bars were much larger than the previous days. Indications, question mark?
Well, that would generally just mean that volatility was increasing a bit.
Yep.
I mean, volatility had been pretty tight.
Joe, are you familiar with dollar tick? Last Thursday, 1 minute bars were larger, which means there's an expansion in process. And sell programs. So when you see large 1 minute bars, that's probably an indication of a buy program or a sell program. And look at dollar tick, because dollar tick, if it's like, I was so impressed with dollar tick when we had this expansion that I'm showing you here, the Y wave that went below 2111. We were at 1,400 negative ticks, 1,600, 1,600 negative ticks, 1,400 negative ticks. I mean, not just once, but like throughout the day. That means there was just there were a lot of sell programs that day. They just wanted to knock it down, and they did. Okay, so, big bars, 1 minute basis means program trading guys or they got sell programs lined up, one after the other after the other. How do you know while a triangle is forming which way it will break? Jack, what do you think?
Well, generally I'll ask you, Sam. So, I mean, there are certain types which will generally break in one direction or the other. I mean, a bull pennant, for instance, when you see a triangle forming at the end of a fairly steep ascent, that will generally be bullish and indicate to at least a retest of the previous high. But in terms of a classical triangle, unless there's a clear pointer like that, it can be very difficult to work out. So if it's an Elliott wave triangle, that's not it's not so hard. So the first thing I check is it an Elliott wave triangle?
Yep, very good. And I think the example Jack showed is probably a more classic example than the bond example. Okay, here's the bond example, and the first thing is with a triangle, you have to consider what's the context. Okay, what's the large, always in trading, it's like I see a pattern, what's the larger context? So larger context for this triangle for me, and somebody could say, hey, here's a third wave, here's a triangle, this is a continuation triangle, we're going higher, right? But the context for this was, we have a red line, we have a cycle high window. HW means high window. So we have a cycle high window. We were expecting this. We were expecting well, it was 177s back then, but we've rolled since then on ZB, so it says 176.09. But bottom line is, this was the context. We called a top. We saw a triangle, and we were calling this to the downside. And why were we doing that? Because of the larger context. So I think what happens with traders is your mindset, you go inside of this triangle and you start counting it, and you're trying to figure out, on the inside of the triangle, which direction is it going to break? And I think a bigger indicator for direction is the larger context. Okay, and by the way, you want to talk about a larger context, look at the dollar. And look at let me not get into that, because we could get into a whole nother conversation. I think we're trying to wrap this up. So I think I would recommend the larger context. Pay attention to that. That gives you a clue. Triangles are very often continuation patterns. Okay, it is here, but it's a continuation pattern to the downside. Okay, so and by the way, I hate to say this, but here's another triangle. This is the one that got us launched into this final high. Here's a continuation triangle that went higher. And why did we say that? Well, because we had a high window. So I think larger context is important. Anyway, I think we're at the end of questions, Jack. So pleasure as always. Anything else you want to add?
No, that's it.
Okay, sounds good. All right. Yep, same here, Jack. Take care, everybody. Bye-bye.